And good evening. This is the Eye of the Storm podcast for the NASDAQ 100 and the S&P 500 for Sunday, October 16th, 2022. I'm going to begin with the NASDAQ and here on the daily chart. But first, I just kind of want to go over some of the observations and questions that came in, excuse me, through comments last week after Thursday, and then some over the weekend. And much of them had to do with this massive turn that we saw on Thursday, which was an incredible turn, and it ran from the markets being down substantially to being up substantially. And in the Dow Jones, for example, it was a $1,300 turn, low to high. In the NASDAQ, it was about $700. In the S&P, it was well over 100. All very large moves. Now, upon further reflection, a lot of that came about because there was some developments. The bond market turned around. The 30-year bond was down over 2 after the release of the CPI data on Thursday. And then suddenly it was not down, but then it started heading up. And the dollar, which was really rising very quickly, turned and was being sold off. So the combination of those, plus just a couple other things being happening at the exact same time, there was a tremendous short squeeze. And once it got hold, it was not going to stop. And the volatility had increased so substantially with the decline from the CPI data that then added to the rise and the short covering, because the volatility just continued to remain high, even though the actual index, the VIX future, lost ground in terms of it was sold, but still, through it all, remained above 30. So the combination of all those together really just kind of gave us that. It wasn't what I want to call a false breakout, but it definitely was a breakout higher. And so the question that I got a lot of is like, how do you figure or understand or even recognize that it's a major turn? And I want to be honest that there are times when I've been watching going like, well, this is not what I'm expecting. And because I'm a day trader, it's not as difficult. In other words, it's like I can turn on a dime. I can turn on a tick for that matter. And so I'd be following price action. But if you're attempting to even be a swing trader or a position trader, and you've positioned for the down move, and suddenly this thing flips. And while I should have been expecting a bounce off of those lows. That would have been quite normal. It was quite a steep decline. And then you get a bounce, but then the bounce just picked up steam and kept going. And it was at that moment, it's like, well, what was really going on? And then again, we move into Friday. The initial move was we get retail sales. They were pretty flat. They weren't really all that exciting. The market continued to rise on now the sentiment that kind of was carried over from Thursday's trade and the overnight trade. And then we had Friday coming in, realizing that we had the banks, we had JP Morgan, Wells Fargo, Citigroup, and Morgan Stanley all reporting earnings. They loved Citigroup, they loved Wells Fargo, they loved Morgan Stanley. They didn't love Morgan Stanley, they loved JP Morgan. They didn't like Morgan Stanley. So there was that then got filtered in for a continued boost. We saw that they were buying up Apple, they were buying up Amazon, they were buying up Microsoft, they were buying up Meta. So it's kind of got it set the stage for, we're likely going to continue to go higher, as at that time I was continuing to look at it as an A wave. So in other words, if I placed the intermediate wave 3 here, I was now looking for an intermediate fourth wave. I had laid out, which I will do again so that we can see exactly how all this played out. And I'm going to take it down to the hourly so we can see the internals on this a little bit cleaner. So here we are. Here's our resistance for wave 4. So we have an A wave, and then we still have got an additional, it's an ABC up. So if we're working on A, the thought process is that the normal retracement for a 4th wave is going to be at least 0.382. As Elliott then suggested and did notate that most often a 4th wave will normally finish or find its terminus, its endpoint, within the price territory of the 4th wave of one lesser degree. Well, here we are, we're counting an intermediate 4th wave, so we should automatically be looking for it to come up into here as it progresses. So it had a total upside target of 11,735, which is then again happened to be a 50% retracement for intermediate wave 4. So it made total sense that overall the market would reach up to these levels. Then we had the fact that we were looking for an A wave up. And initially, this is where we got left on, actually, let me go back, Friday. This is all the day. And then we about, I guess, no, that's into the Globex session. So we ended the Friday session. That was the high. The high was 11,147. And I thought if that was the high, then we were going to be looking for an ABC down. As it turned out, the market did go up a little bit more, then came down, then rose. So this is where it starts to get interesting, because this all, you're like, okay, if that is, we got a 1, 2, 3, maybe up to this level, a 4 and a 5, that would be A. We get this very small, remember this is the hourly chart, very small ABC down, smacked onto the 50, and then kind of launched higher. But it didn't come up in a 5, at least not on the hourly chart. Just came up as a 3. So it leaves a very ominous view as to what actually is all of this. So 2 things that I'm looking at here. The counts are not easy. The patterns are not easy. The volatility is producing quite extended moves and sudden outbursts and sudden moves. Now, I am going to stick with the overall Elliott pattern being an intermediate 4th wave. I went back and I did look at what we had completed, and it is pretty clean. I'm going to go back out to the 4-hour at least so I can show that wave 3. It is pretty clean in terms of the wave pattern coming down, and that this was, 1, 2, 3, a 4, and then a 5. So I went back to that, and that caused a little bit of confusion amongst a lot of subscribers and people that do follow my work. And I basically had gone back and said that this actually was a count that I had in motion previously, but I did not let go by or had disqualified it or said it's no longer a valid count. I shifted to a little bit different and figuring this could have been minor wave 1 of intermediate 3, minor wave 2 of intermediate 3, and it certainly kicked off as if it could have been a minor the start of a minor 3rd. Now, if that's the case, then this is minute 1 and this is minute 2, and that still can be in play. But I'm leaving this up for the moment because what I'm also noticing is that there just seems to be a lot of upside pressure being put into the market. Got to buy, got to keep it going, got to keep it up, got to present. And what I did read by another analyst, just somebody discussing market activity, that what we have going on is we're coming into the final stretch of the midterm elections. So we're into that last 3 weeks prior to the midterm elections. And then we will finish that off. But there seems to be a consensus and some thought that the markets are being bolstered, so we try to give the best picture that we can. My saying to that is like, well, has not really started off that way. That may be what they want to contribute Thursday's activity to, but I don't agree. So I think that we have to continue to realize that we may still be in an intermediate fourth wave correction, but there's a pretty large fifth wave still waiting. And even if this is going to be minor wave one, minor wave two, minute one, minute two of a minor third wave down, boy, we're in for some deep decline here. And I want to make that clear that I think it's like, as I say, account, a specific thought of account, the ramifications of that count are going to be important. And that also goes into what I really want to put on as a label, because the implications, the ramifications of this being a minor third wave down are heavy duty in terms of what this larger intermediate third wave, excuse me, is going to end up looking like. We would definitely be looking at a market that's going to go sub 10,000 and do it pretty dang quickly. Now, how does this really all fit in? We're looking at a global picture that just continues to be disturbing. We have the Ukrainian situation. We have now some rhetoric coming out of the government meeting, annual meeting in China, of the Chinese leader basically, letting us know, letting the world know, and the ruling party know that part of the leader's concern is, again, reunification of China and Taiwan, and using force if necessary. So these things still remain alive. We still have a very volatile situation going on in the Ukraine. We still have a very volatile situation going on in Europe in terms of natural gas, the disruption of natural gas flowing through the pipeline, the Nord Stream pipeline, which has now been destroyed. They had two explosions, and basically reading today that there's a lot of thought that it's been destroyed, that they're going to have to, even to do repairs, it's going to take quite some time. And now we're looking at what is the outcome of that? What is the outlook for the European Union's, the economies of those countries? What's going to happen? So we have a lot of things that are going to have to be factored in, and they're going to have a play in how things get traded. So with the disruption, first of all, with Russia turning off the valve and saying, "Oh, we'll shut down the valve. You're not getting any more from us," and there was the mad dash of Germany and several of the other countries to go and buy liquid natural gas so they make it through this winter. They needed to build up those stockpiles so that they could provide heat for their citizens. Now that that's been done, what's it going to look like moving forward? How is all of that going to really affect those economies in terms of how their inflation is going to work? So we've got a lot of things on a global scale going on. We have a lot of things going on here in the United States. We've got political activity going on beyond the pale, so to speak. There's still so much noise that to react would be insane. We do have a persistent inflation problem that was aggravated by the release of the PPI and the CPI. The market choosing to react to the dollar and the bonds did not belittle those figures, the data that came out about CPI. It did not push into the background the fact that inflation is running pretty rampant here in the United States. it didn't take away from what really the focus needs to be. It just delayed looking at it because of what immediately took place. So the short covering seems to have happened on Thursday. Then on Friday, we did have an expiration. And I have to tell you, I was impressed that Apple had a huge swing again. The high on Friday for Apple, I believe, was 143.5, let's say. And here they close it at 138. So in the beginning of the session, they're shooting above 140. Well, we got that done. We're above 140, 141 for 243. And they started looking like they're going to head for 145. Then all of a sudden, things turn. We reached that morning high, and then the sellers came in, and they did not stop. So again, Thursday's massive turnaround turns into Friday's massive turnaround. Not as big in terms of points, but the Dow was up over 300. The NASDAQ was up 200, and then flipped and ended down 300 or 400 points. The Dow ends down 400 points. The Russell ends down on the day, along with the S&P. So this volatility is what we need to keep a gauge on. And then what we're going to be putting together here is that when we get these turns, volatility has a play. They're now reacting to every little tick movement in the dollar. If they buy it, we're sellers. If they sell the dollar, we're buyers. And you can see it come in. They will come flocking back in. The bond market, what is it doing? Is it rallying strongly and then giving up the rally? Is it down strongly and then starting to rally? That is turning into triggers for how I think institutions, basically. I don't think that it's really individual investors. But we do have a lot of hedge funds and mutual funds that handle investor money, and then they can kind of come in. So what I want to say here is we need to, and when we're trying to determine how do we catch that turn, you have to keep all those factors in mind. And then you have to stay open to, you don't care if it's bullish or bearish, you just need to capture the move. Now, if you're a position trader and your positions are going to look like they're starting to get killed, well, then you've got to have the following. This is what I generally try to coach people on. When you're stepping into trade, when you're going to put on that trade, what's the trigger? Is the trigger a moving average? Is the trigger a Fibonacci? Is the trigger a particular market profile level? Is it an order flow? Is it a point of control? Is it a value area high, a value area low, an extended value area high or low, a naked point of control? All things factor into what a market gets programmed to do. So when you keep tabs on that, you're going to get a trigger. Then you have to also determine, that's where I'm going to get in, long or short, depending on where it's happening. That's where you're going to get in. What happens next? Well, where's my target? What am I looking for? And again, is it the next level up or down on a moving average? Is it, up from the point of control down to the value area low on an order flow chart? Is it many other factors? So we've got fib numbers, we've got Elliott, we've got a lot of things that come into play. But then the third thing that you need to determine is, where are you going to get out of that trade when the trade becomes invalidated? And what I mean by that is, where will that trade no longer be doing what you're looking for? That's kind of the most important thing that I think a lot of us as traders forget to include in our equation or in our formula. So you put it in as a rule. Know before you get in the trade what you're looking for, what your targets are, and where you will get out, because the market's going to be telling you, we're not going there right now. We have other things on our mind. And the volatility will get it there a lot quicker than you think. Volatility is at play right now, as you can see. We opened, we went down so slightly, and now here they come. They're starting to buy it up. Now, let's start to jump in into, let's take a look at the NASDAQ. So everything I said applies for all markets. It doesn't make any difference. It's like whatever you're trading, all of those things need to come into play. Now, let's get to the NASDAQ and think about what the NASDAQ is doing and what it has done. What we were looking at previously was, again, that it was an ABC up. We had our fib levels that were showing us where expectations for the entire move, what it could reach. And trust me, that from there would be a pretty dang solid rally. If it got up to 11,735, which is where the previous fourth of one lesser degree finished, and according to Elliott, that's where I should be looking. So I'm going to look for it there. But what we're also now looking for is 5 waves up. Now, people would probably think, well, look at that strong downside. Now, let's just say, because I did point this out, now I've got even better fibs that I can throw in there. If indeed this is wave A, and now we're looking for that, where would that B wave go? Let's take a peek to see how far down it came on Friday. Look where it came to. Straight down. So I initially had been discussing that it should be a clean shot down to a 50% to 0.618% retracement of wave A. And it got beyond. It went to the next one down, which is considered by a lot of market makers a sweet spot. So in other words, 10,717, I think the number is 714. And the market right this morning, actually, or this morning, excuse me, this afternoon, let me just take a peek. Where did this get? 713. Look at how much we've rallied. We're already $70 above, $77 above that level already. Touch it, run. And we've been open for 9 minutes. Volatility remains real. So if we're going to consider that a low, it can right down to support and it is bouncing off. Now, it could be that's it, that it's just going to be a little bounce. But if I am now looking for a C wave up, and that would be a minor C of intermediate wave 4, all C waves are 5 waves. That's what will be produced. All C waves consist of 5 waves. If it's a triangle, it's still a 5, but it's going to be 3, 3, 3, 3, 3. But it's still 5 waves. I'm not going to be looking for a triangle right here or a diagonal right here. I would be looking for 5 waves up to complete wave C. And so we would just be in wave 1 of C if that's what we're doing. Okay. So what do we have on the way up? Well, if again, I'm looking here for my a little bit larger, we don't really have any resistance until we get back up to 11,070, actually 70 to 75. But internally, we might find some, and that would be just at the fibs that we had as support, they're now resistance, because where did we come to? We just got ourselves up to 10,781, but we got up to 90, stopped, we've come back, we're sitting just right at that support or resistance. So these remain active. What's also, we've got the hourly 4 sitting right there. I'm going to open this up. Then we have the 8 at 10,838. Then we have 10,870, we'll call it. 10,960. 11,074. That's where our first fib resistance for this final push higher in a C wave would come in. Then our next is 11,440. Then we have 11,735. Yes, they continue to be there, but if it starts going above there, it's going to be something different. I don't think it'll be a 4th wave. Can the market start to really rally here? Yeah, it can, but I'm not necessarily looking for it right now. I still think we have additional decline to finish up and put in the finishing moves for the primary C wave. That will then complete again the cycle. I'm going to pull out to that daily again so we can see it. That's going to bring in right now, we're on a primary degree, right? There's primary A, primary B. We're in the primary C wave. We've already taken out the low of A. Good start. That's what we look for. And now we're looking for the completion. Now we're in an intermediate 4 of the primary C wave. If this is going to stand, then we're in the intermediate 4th wave, and what's left after when this is complete, an intermediate 5th wave, and it should be a very quick trip down. It should be another slam dunk by the market, as we saw in the completing point for this intermediate 3rd. So I'd be looking for it, but from a little bit higher level, and then for it just to start to tumble and take out that low. Now I'm going to go back again, and we're going to take a peek of where primary wave C can get to, right? So those are our fibs for a 4th wave. And again, on the inside, I think we have some internal fibs going on there. So I'm going to get rid of all of those. And I'm going to get rid of this guy. And now we're going to put up different, which are going to, again, reflect downside. So because our C wave was pretty relatively small, it wasn't that small, but it kind of does not point to a lot of the levels that we would be looking for on the downside, but it does kind of fill in some blanks. So let me go back out to the daily so I'm not crunching the chart all that much. So again, once we finish and we're into the intermediate wave 5, which will be then expected to complete the C wave, we have where wave C would be equal to wave A, and that's at 8,041. I normally, in my history with Elliott wave, on this degree, on a primary degree level, that C wave should be pretty strong. And I'm going to say what I have to look back on in terms of a primary degree would be that we had a primary 4th wave that took us lower in March of 2020. That low was not necessarily, it was in total, but it was a C wave, but it was on an intermediate degree inside that 4th wave. And it took the market, it hit the market really hard. And that was all this. The rally off of it was pretty intense too, but that travel down was straight red down to that low. So again, ultimately, what we're looking for is, I'm looking for cycle wave A to complete in the price territory of the 4th wave of one lesser degree, which is primary 4. I not necessarily looking for something this deep right now, but there it sits, and I can't deny that the possibility exists. Again, I'm not going to take the time to stop and not belittle, but just kind of argue a point of can't happen because we've got this going on, we got that going on, we got this, and that, all these wonderful things. It's like, no, it's because of those things, particularly because all the money that's available. There's still a ton of money floating around. That all has to be really redistributed in places where people aren't thinking. So yes, can the market go here? Yes, can we get a cycle wave A complete and then a cycle wave B intense rally? Yes. What comes after that? A cycle C wave down. Does that have the potential to really flatten this market lickety split? Yes, it does. But there's enough going on in our world that will extend into 2023. And I don't know, can't tell you how far into 2023, but this is not all just going to go away. This isn't, we're just going to wake up one day and the world is beautiful again. Not going to happen. It's going to take time, and it's going to take a lot of effort, and it's going to take a lot of work on all players on a global scale. A lot needs to be resolved, needs to be settled, needs to be put into place so that we can have economies that will recover. Not just off a whim and hope and a prayer recover, but solidly recover. So I understand what's coming out from the current administration and the political basis. They all want to be reelected. They all want to stay in power. So they're going to present a picture that's a little bit easier for us to digest and what's happening economically. And really that inflation, okay, we'll live, et cetera, et cetera. That part's the truth. We will. We're not going to like it, but we should be able to survive. Now, knowing that we have a pretty strong balance of downside left before we get that cycle degree B wave rally, we're going to be looking for things to stay pretty active in terms of volatility. I would not be expecting the volatility to really kind of slow us totally down into nowhere. Not actually looking for that. So for tomorrow, here's the story that the markets really have to do, because I cannot say with certainty, that we definitely got the C wave up. If it's following pattern, then yes, I would expect a C wave up, A, B, C. But as I said, this is kind of funky. Now, if they decide that was just some covering, the people coming out of expiration, a little too short, they're coming in, they're kind of taking care of some things. And once that's done, either Asia opens or then when Europe opens, something's going on and they don't like it, and we start to head south again. We don't have anything support-wise really coming off. Okay. So this is, again, the stronger downside. But if I have to consider this as wave 4, again, I got to go out to that daily chart. Actually, I can go to the 4-hour chart. Let's see what I can do here. I'm going to start to put in what we got. Let's put all our fibs together. If wave 4 is done, and I'm not saying that it is, so please don't misunderstand me. Okay. This is something else that I find that I want people to really listen to what I'm saying. If the 4th wave is complete, and that's a big if at this point, we don't know. But I can't tell you that we're just going to continue to rally and get this thing defined and underway. I mean, that's kind of what I'm looking at right now, but it doesn't mean that that's what's going to happen between now and tomorrow morning when we come in. So if that 4th wave is done on Friday's Globex high, actually, I think, or our opening highs, then let me see if that's correct. I think it is. No, it's not. Let me just hold on a second. I'm sorry. Come on. I want to make sure that I've got it. I do. Okay. So 11,253. If that then, right? So that would be 3, and this would be 4. Now we're looking for that 5. Wow, we got a lot. And then we're coming down in here into this hole. And once it breaks below 10,663, actually, then we're straight shotting it down. We'd be looking for 10,000. What was that low? 10,440, 484. Should go through like butter, because the first support is 10,297 at 10,300, then 10,000. Then this is how quick we could go, folks. So this is what I'm talking about. We get into these black holes of like, sorry, support, no, danger zones. So things can increase. The volatility can pick up. The speed will pick up. The bailing out will pick up. The value area, or the value, will really depend on supply and demand. The supply is sellers looking for buyers. The demand is, where are the buyers? And they're turning into sellers. So without buyers really stepping up to the plate to take in all of this inventory, so to speak, we fall, and we can fall fast. Now, that is just a scenario. If we start to break down, if we come in tomorrow morning and we're sitting at 10,500 or lower, once we drop below 10,484, wave 4, in my opinion, would be done. And we're into that 5th wave. And an intermediate fourth wave would come in 2 days. Now, one thing I want to address is like I did have someone, and I please, if you have questions or you work in your own account and you're looking to somebody check in, I welcome those comments. I welcome. Please share your accounts with us, with me. I will respond to you. But I had someone that said, well, what if this was only minor wave 1 of the intermediate third wave? And I said, is that possible? Well, if I had to count it out, I would say, yeah, it's possible. But the implication would be devastating. We would think 1 of intermediate wave 3 of a primary C wave. We would definitely be looking at the 2009 lows or lower. And that's before we even get anywhere else in terms of what we got coming up. So that one, I will say no to, simply because of the ramifications of it. Do I want to disqualify it? I would be a fool to say absolutely, yeah, no way, it's not going to happen, because the next thing you know, something serious enough comes out and happens, which could be in the Ukraine, which could be something happening to that nuclear plant, something happening on a nuclear level. You watch the stops get pulled. You watch if something that dangerous happens. So be more fluid. And what I mean by that is just be willing to change gears at high speed, because this race will be won by those that can flip and go with the flow and not fight it, not question it. It's price action. Follow the price action. We'll have the conversation after about why and what went on and what about this and what about that. But when it's happening, it's price action, and you got to follow the price action. There is still a ton, and I mean a ton of money coming in and out of this market. And as long as that's there, why not go in and claim your portion? But you're going to have to be fast. You're going to have to be on your toes. You're going to have to pay attention. You're going to have to trade. If you have any hesitation in trading, if you have any questions in trading, you're going to get stomped. So it's a mindset game. Now I'm going back to the trading conversation, and I'm sorry. It is mindset, and you better have a strong mindset when you come in to do this. Know what you're doing with your trade. This is my trigger. This is my target. This is where it becomes invalidated. Boom. Now I'm on to the next trade. You get knocked out on a stop. Boom. Go to the next trade. But if you're sitting going, you move your stop, and then you're like, well, they're going to take it. It's going to come back. It's going to come back. It's like, and they keep taking it against you. So instead of taking the stop and then reviewing and realizing I need to jump on board this trade and ride with them, you're still fighting it, looking for it to turn. That's a big mistake. Be more mechanical, not cerebral. When you're really focused on your P&L, time to close the trade. I will leave it there. And so what we got going on right now, I would think, yep, we still got a C wave up to do. I can't tell you what they're going to base it on. I do not see the Fed deciding they're going to do a pivot. That ain't going to happen. Now that I said that, it will happen. But I would not be expecting anything from there. I think it could have a lot to do with the dollar. It could have a lot to do with the bond market. It have a lot to do with just maybe just a shift in market attitude. Don't forget, we got a whole bunch of crap going on in the UK. She fired her head of the exchequer, which is basically the Bank of England, the Central Bank of England. Oh, sorry, you're my friend, but you're out of a job. And put somebody else in there. So she might be out of a job before the week is out. Lot of things happening politically, economically, market-wise across the globe. So stay focused, stay on your toes. Initially, I'd be looking for continuation to the upside to get this C wave down. Here we are now. We're starting to come back up again, and that's all great. So we have a little play. But again, I don't know. Look for here. You got Got to get it back above 10,900, got to get back above 11,000, and essentially got to get back above 11,200 and 11,300, 400, 500 up into this area. And that's just a minimum. That'd be what I'd be looking for. You're into the price area to the fourth wave. We've already done that. See, we're already in there. We already got midway. So all of that fits. If they want to turn it from here, it still could be considered a fourth wave. It's just real fast. 2 days for an intermediate move. Can't say it doesn't happen, considering this one was several weeks. This is June, and this is August. This was on Thursday, and this was on Friday. Stranger things, but again, we're just trying to keep up with what's happening. So upside, yep, we got our levels. We've got a lot of moving averages, kind of looking spaghetti right now. We got the 8, we got the 20, we got the 50s, we got the 200s that will all provide resistance on the way back up. Doesn't mean they won't get broken, but it might put a pause, give us a chance to take a breath, et cetera, et cetera. Downside, I think if they kick it in, folks, it falls into a black hole, and we should move as quickly as we started to last Friday. Okay, let's jump over to the S&P and take a peek. S&P is the same situation, right? I've stripped it all down. I've left everything off. Let's open this up. Again, if I'm looking from here, this at best is 3 waves up, and then it sank. So I'm already like, what? What at the heck happened? What is this? I don't know. But I am looking at it as corrective in terms of it's an intermediate fourth wave. Was that the top? I don't know. And now we're going to start to fill in our fibs to see, right? If we're just doing straight fibs, which would be the retracements, and I'm looking at where this could come, I got to go back out to the 4-hour because I need to do 3. So I got to put in my fibs for here. Nope. Come on. Come on. Sometimes it gets a little fussy. It doesn't want to anchor. There, got my anchor. And there we're going to that low. Okay, so initially we had 37.60. And that, we got kind of close, but that would be minimum. And then where we have the previous fourth wave is 38.25. 38.20, actually. So we've been looking for, well, maybe let's just see, 38.20. So that is where the previous fourth completed. 38.20. That's a reality. That's a possibility. Nice rally we got going if it can get there. What do we got beyond that? Well, we have a 37, almost 3,800, but 37.97 up to 38.20. We got the 200s, the EMA at 97 or 3,800, and the SMA at 38.20. That fits perfectly. And then we have the 50% for a fourth wave, could, at 38.38. So we got a zone. And if we're going to rally, and it rallies up in a fourth wave, that's where I would expect it to kind of start to come into. But it needs to develop, and it needs to go up in 5 waves. So we have our requirements. We know what we're looking for, but we've already been shot down with this final thing up here being only 3, as difficult as that is. So again, I need to put that aside, focus on price action, and do the best I can in terms of price structure and fibs. Better to have something than to have nothing. Better to have an idea than to have no idea. Again, as I said to the NASDAQ, same thing applies in the S&P. You're going to put on a trade. What's your trigger? What's your target? And where are you going to get out when the trade becomes invalidated? Please keep those in mind. Please use them. Whether you're a day trader, position trader, swing trader, all of the above gets put into that category. It will save you a lot of mental torture if you go in and you trade mechanically versus cerebrally. You got it rolling around in your head. Oh, they're going to come back. They're going to come back. It's like you walked right past your stop. And it's also when you're trying to determine where should I recognize that the market has changed direction from what was thinking to something I wasn't thinking. The minute your brain says it'll come back, yeah, it's going to turn around. That's when your common sense should say, I should be out of this trade. Then I can look at it clearly rather than with a bias towards that position that you're sitting on. We have a tendency in an emotion situation to calm ourselves as, yeah, it'll turn around. Give it a chance, give it a chance, give it a chance. Meanwhile, it's down another 20, down another 30, down another 40. And you're sinking fast. Okay, here, let's take a look at what we can expect, possibly, if this is the completion point of wave A, and this is the completion point for wave B. Yep, I did. And we're going to come in, and that's saying that today's Globex low that we've just done, then what we have coming back up, we've got 36.42, then we have 36.79, then we have 37.06, then we have 37.34. Wow, that's taking it above that level. Where we have 382, we got a cluster. 37.53, 59, 73. Wow, nice. And then we have kind of a little bit here, not a whole lot, but we got the 38.20 level, 38.22. Wow, nice. And that's where wave C would be equal to wave A, 38.22. You're going to see how things start to line up. So then we can maybe look for that. Does not mean that's where it's going. The only thing that can tell us of where it's going is the market itself. What I'm trying to do is wrap some parameters around what's happening so that when we come into trade, we can put a little bit of structure around it, parameters around it, and give ourselves a running start at working a position. Now, employ the other things that I just spoke about. Have your trading rules. And they're going to be different for you than they are for me, because my risk profile and your risk profile may be miles apart in either direction, that is, by the way. Maybe you're trading a $2 million account or a $500,000 account. You're going to have a much different profile than somebody trading a $50,000 account or somebody trading a $10,000 account. So bear in mind, your trade rules are for your risk profile. My trading rules are for my risk profile. I'm a day trader. I preset what I kind of look for with each trade. And so I now can design my risk profile around it. If I'm looking to make 200, why would I want to risk more than 200? That's ass backwards in terms of risk profile. So bear all things in mind when you're attempting to trade in a fast-moving market. It'll make your day or destroy your day, but it can be very difficult to trade, or it can be very easy to trade when you're following the price action, you're following the indicators that you have and that you use. Now, this is an hourly chart. My suggestion is I'm looking at an hourly picture, but I don't necessarily come in and put on a trade based on the hourly chart when I'm a day trader. I take it all the way down. And as I have shown you before, let me go to active trader. Here's my NASDAQ. I got a 1 minute, I got a 5 minute, and that's what I'm trading with. And then I've got, these are from John Carter. They're squeeze, the TTM squeeze, and I believe, I'll tell you what they're called. And if you have Thinkorswim, you can get them. They're there. They're the scalper alert. They're pretty good on a 1 minute chart. We're still working off of this afternoon for me, early evening East Coast. They put out a buy sign, buy signal, right after we opened, pretty much. Bing, 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 bing. Nice trade, right? You're getting in at 770, wasn't it the low? 768. It's traded up to 1,800, 10,800. Nice trade. And it's not giving up the sell yet. It's not telling you to sell it yet. 1 minute. So sold, bought. Well, that was actually Friday. Oh, that was actually today. Again, market opened in 4 minutes. We opened at 787, dropped down to 767, $20. But again, that's not a whole lot when you're in the thick of it. But this is a nice trade. Then again, using a 5-minute chart, you've got your moving averages. You've got, let me open this up. You got a lot. See, it doesn't look all that big here. Nice move here, not much. But 5 minute, we're breaking the 50. Now we're hugging the 50. So you can build trades around that stuff. Again, both markets. I would look for continuation. We're looking for the construction and the development of 5 waves of minute degree to fulfill a minor C wave of intermediate wave 4. That's how I'm going to leave it. If this thing breaks down below 3,500, right, got pretty dang close on Thursday, then we're going to consider that the completion point for intermediate wave 4. And we are then heading lower. So that's our story. That's the picture. I'm going to wish everybody a really great trading day tomorrow. Again, I'm really not expecting volatility to go away anytime soon. And as I often say, volatility is increasing, but it is applicable in both directions. As the market swings and moves quickly higher, they will knock the volatility, the VIX index, down. But I don't think that suggests for 1 second that the speed at which the market is moving is going to diminish. So that's kind of where I put that. VIX gets used for a lot of different things, and its levels get used for a lot of different suggestive indicators. So right now, I wouldn't think that we're seriously going to be swallowing that we've got a super nice upside move coming. When they did this on Thursday, the VIX did not dip below 30. You would think it would. It didn't. And if it gets all the way up here and maybe dips below 30, but not by much, wow, folks. What it's telling you is that the market is not trusting upside when it knows in its heart of hearts that there's additional downside to come. So things that I will be watching. I do keep a side eye on Apple. I do. Apple is a gigantic corporation. It's the heaviest weighted stock in the NASDAQ and in the S&P. And it's actually in all 4 indexes. So it will grab hold of movement when it has to. And sometimes it lets it go, and sometimes it will not. When I add to Apple, Microsoft, another gigantic titan, and then we add into that, we've got others. We have Google. We have Intel. Intel doesn't move quite as heavily as everybody else, but it's there. We got Metaverse, billion-dollar company. They're all big. Don't forget the next week what also that we have. We begin to fall into the earnings season. And we do have, I will look at all of that because I don't think we have this until the end of the month. The 27th, we got AMD on November the 1st. We've got Amazon on the 27th. We've got Amgen on November. So, we got a lot of things that don't come out until much later. Bank of America is tomorrow. So we got the Bank of America, but I wouldn't suspect that the Bank of America is really going to do any worse or any better than JP Morgan and Wells Fargo. Goldman Sachs, Tuesday. Tuesday, we hear from Goldman Sachs. So we still got the banks coming out. And the big boys, the big banks, the too big to fail banks. So a lot to go on, a lot to digest coming into this week. So have a great trading day tomorrow. Our next update will be on Monday, October the 17th.